minutes with anyone. This is a public meeting, so this will be public information, everything discussed here. So I think what I'd like to do first of all is start with a bit of a where we're at right now, and then I do have some examples I want to walk through and some explanatory documents I have. And then I do think it would be helpful for you all to hear from our utility valuation experts, Owen and Brian Fogg, and also definitely want to make sure that I leave space for our district advisor team led by Christy Wright to get into some of the nitty gritty about some of the work they've been doing over the last few weeks to try to ensure that grand lists are complete. So where we're at right now, so there were a few overlapping things happening at once this year. So we have recently released utility valuations. Vermont has always, sorry, there's a lot of folks coming in. It keeps beeping at me, but I'm going to just start to share my screen to show you folks. So just for a little bit of context, there's two things happening in 2025 that are different. So outside of any legislative act, the tax department is responsible for establishing utility values. That's been the case for quite a while. And then those values are provided to municipalities to use in addition to any other information that municipalities want to use to establish values. So a few years ago, we had a report from the legislature and a directive from the legislature and a legislative appropriation to contract with the utility consultant. So can everyone make sure you mute so we don't get feedback? Thank you, whoever is the magical person helping mute people.
Jill, I'm going to mute all, so unmute yourself.
Thanks, Terry. Okay, great. Thank you so much, Terry. I really appreciate it. Not our first rodeo on Teams with a lot of people. So we did contract with our utility appraisal consultant. It's Brian Fogg and Owen Fogg. They've been longtime folks working in this space in Vermont and around New England. So we put that into place separate of any legislative act, but we did get their support and financial support for that. We've been using the same methodology for quite a long time and needed to move to one that would meet USPAP standards. So we did implement that new valuation methodology this fall. You might recall we published a bunch of information about the differences between the current methodology and the new methodology, and what that would result in as far as actual differences town by town to some extent. And that is available on our website as sort of the example, the statewide picture. And then also Act 144 of 2024 in the legislature requires specifically transmission and distribution valuations. That's it, not necessarily other utility valuation constructs be used by the listers and assessors for property taxation. So that is a new construct this year. So, unfortunately, or for better or for worse, those two things happen the same year. But I think that will actually work out fine. And now, in addition, we did want to make it clear that any municipality that had an existing agreement, a settlement agreement or court decision, that those pieces obviously will be recognized until those are expiring. So what we've done the past few weeks, so the utilities, this was obviously a different methodology. So this was different for the utility providers as well, right? So that's Green Mountain Power, Velco, and then I think it's about 17 municipal and cooperative utility providers. So this means that the documents that they have sent to us and to you all in the past are a little bit different. The components that the Foggs asked for in order to establish values were a little different. So there was a lot more sort of back and forth to try to make sure that we got the information that we needed to come up with those valuations. So that was certainly a challenge. We did use.
Can you hear it now?
No.
We did use, sorry, I lost my train of thought because we've got folks off mute quite a bit. Just make sure everybody's in here. All right, so we did use a software system called Utility Valuation Services to collect this information, which is also new this year. So, I do think there were multiple factors that led to us not getting these out to you as quickly as we'd like. We certainly worked as hard as we could to get them out as soon as we possibly could. But this being the first year that the filers were providing different information and we were using a new system. And then I think the most important part, and I definitely want to see if Christy does want to weigh in at some point, or anyone, Terry or others from the district advisor team. The most important thing for them is that we wanted to make sure that we captured every component of real property that should be on your grand list and any items that should be personal property. So the methodology used by the FOGs to establish the transmission and distribution valuation did not include some of the components that might have been lumped into those values in the past. So that doesn't mean that they shouldn't be counted or taxed. It means we wanted to make absolutely sure that those things were captured. And so for the last several weeks, frankly, Terry Gildersleeve and Christy Wright and Benton Mitchell and all the district advisors have gone grand list by grand list and town by town to ensure we were capturing all of the UE valuations, including but not limited to the transmission and distribution values, to make sure that pieces were not missed. And so while that that certainly led to a delay in getting you the information, it gave you better information and it made sure that we were really working directly with the towns and grand lists from years past to make sure we were not missing any components. So if you do look at your spreadsheet, each town got your own specific spreadsheet sent to you, and it's also available to you in VT If you still have questions, or if what you're seeing on that list doesn't match what you think should be on your grand list as far as properties, definitely reach out to your district advisor, because we want to make this right the first year so that going forward, it'll be very clear where the numbers from the state's utility valuation components plug in, and we make sure that no real property or personal property that should be captured on your grand list is missed. Christy or Terry or Benton, would any of you, not sorry to put you on the spot, but would any of you be interested in just explaining, or if I missed anything as far as the process you folks have been going through over the last couple weeks?
Yeah, a little on the spot, but I'll do my best. Basically what we tried to do was we tried to take the grand list from last year, and for every single utility electric property that was listed, we tried to account for it in one way or another. So in many cases, the number that you would get from Brian became one number, whereas some towns may have had 3 or 4 numbers. So we tried to indicate where you should put that number. Having done that, some towns have some village and IDs that need to be accounted for. We're still working on that. We also accounted for every utility electric property, which would include solar and hydro, which were not part of this project. But we tried to just tell you what those were in the grand list and what they would remain being, just to kind of make it abundantly clear every single item that's in utility. And that becomes important when we get to equalization, because we want to make sure we're on the same page. And then lastly, I think Jill alluded to the personal property piece. Some items that may have been considered real property in utility electric in the past were deemed to be personal property, and some are possibly in between, and we haven't quite figured them out yet, so we're working on that. So some towns would have received a caveat on their utility that we sent them, saying that we're looking into more possible real property through what's called FERC 397. It's just the coding for it. And so we're digging into that with Vermont Transco mostly. And what that could mean is potentially some more value that we might find for you. But we wanted to, lastly, for that do tax personal property, we're kind of digging into that to make sure we didn't miss anything and that they truly reported directly to the town and enough on that. So I think I got it all.
Awesome. Thank you so much, Christy. Appreciate it. And so I wanted to give a little bit of statewide context, and then I wanted to walk through some of the pieces that are up here online. And then I do want to hand it over to Brian and Owen to sort of explain a little bit, because I do think, and I do want to also start out by apologizing. I think I could have done a much better job of explaining a bit more of the details or anticipating some of your questions. So I do apologize for that, but we are trying to capture all these and collect all these and get all of the answers that you are very much right to be asking the questions about. So thanks for everyone for your patience. Like I said, we sent out a bunch of information this winter and we had the projected changes on that table on this page in November and December. But I think until you actually saw it, it was a little hard to digest what that actually meant. We also did host a webinar for municipalities earlier this year with Brian and Owen to walk through the methodology. But again, I think until you actually take a look at the outcomes, it's hard to actually understand the impact. I do think another significant impact, which is not a new construct, this is what we've always had to do since 1992, is the application of the CLA. And that has definitely led to some additional sort of confusion and reduction in values in some places when that is applied. And so I'm going to walk through some of those commonly asked questions and the answers to that. And then I'll hand it over to Brian and Owen to sort of fill in any blanks that they have. So again, we've got the new methodology that is new this year. We did run it last year and did the comparison of our prior methodology and the new methodology to show the difference. We've got the new legislative requirement that as of this grand list here, that transmission and distribution valuations shall be used on the grand lists. And then we've got the application of the CLA on there as well. So a week or so ago, we mailed out all the values that we had for those particular transmission and distribution and other utilities that were available out to towns. We also, and as Christy was just articulating, they are still continuing to really scrutinize and like look for all the different components and working out some last minute threads that they're pulling on. So they are still working on some of those pieces for some towns and for some for some providers. So definitely do not hesitate to contact your district advisor if you have questions, or if your individual table noted that there's still information coming. That's why that note is there, to let you know. So there is on our website, there's the communications we sent out this past fall. And then on here, I think this is a place where I think I could have done a much better job of translating the before and after for you all. It's really complicated stuff, but that doesn't mean we shouldn't try to articulate it. The methodology that we are using now is a different methodology than what was used in the past. So there are different methodologies depending on whether it's a co-op, Green Mountain Power, so distribution, or transmission. So this is like, for instance, Belco. So those methodologies are a change from how we used to do that. And what that meant is that there were some changes in values up and down. So I think one of them, if folks leave here with nothing else, I hope you leave here with a few answers, but if nothing else, overall, the values for the utilities is actually increased, which is going to actually help with education fund liability, and it's going to increase the education taxes collected from the utilities statewide by about 7%. So that is that's if you lump in all the UEs in addition to the transmission and distribution. So I think that's really important, because I think one of the first concerns that folks had is about the impact on what their education property tax liability is. And we do have a question and answer on here that gives the sort of calculation, but overall, the state is actually going to be getting more money into the ed fund from the utility valuation because of this. And your education property taxes are based on your grand list values. And so if you were one of the towns that had a reduction in your utility value, your education liability would also be reduced. So it is not a double taxation. It is not a straight one-to-one for your education property tax liability. For your municipal grand list, it certainly can have an impact. Again, we did some calculations. Our senior fiscal analyst provided an example that we've sent out and put on here, that while it might seem like it's a very large and very concerning number, it does appear like the actual literal impact can be a lot less significant. So there's a few different examples why the valuations are so different, right? So some towns had a significant increase based on this new methodology, which we knew would be the case, and some towns do have a lower value attributed to their particular municipality. That was especially the case for co-op and municipally owned utilities. And again, after I'm done my spiel, I want to hand it over to Brian and Owen to articulate that rationale. So those were reduced, generally speaking. And so those, of course, also are ones that often are working in more rural areas. Also, if you look at the CLA adjustment to the values, which again, this was available on each of the tables that were sent to you as towns. We had some examples that were shared on the listserv, and then I've actually got the table, the statewide table that we'll be putting up that shows the sort of before the CLA and after CLA, but that did have a significant impact for some folks. And again, the CLA construct is a Supreme Court decision. We do not have a choice in the application of that. And that's been the case since 1992. And it actually does make sense and it actually works out. We do have a formula that I'm trying to get up on here from our fiscal analysts that just show that the way that our education property tax structure works, it actually does not have the same impact that it might feel like it does. So we are trying to sort of do that math for you and help folks understand. Again, like we were talking about earlier, we want to make absolutely sure that any things that were in your transmission and distribution UE prior that actually belong as personal or commercial, for example, are still captured. That's the hard work that Christy and her group have been tirelessly working on to make sure that nothing gets missed. There are a few different reasons why some of the assessments are lower. And again, statewide, the assessment has gone up, but there are some town by town assessments that reduced. There is a different methodology for how the model calculates the per customer value, which is available in the in these I lost it, can't see. In those 3 documents that show the valuation methodology. We also had to make sure we were not counting communications property and other things that should be personal or communications property. Just to add to the fun, next year, starting next year, due to Act 145 of 2024, we will be valuing communication assets differently as real property. So that will be, just because we don't have enough changes, that's another piece that the legislature passed last year. We got an extension on that. We asked them if we could have another year to do that. But those pieces would be captured under that new methodology starting in 2026. There also have been changes to Green Mountain Power's assessment. Again, I'll defer to Brian and Owen on how to articulate that a little bit. But these fluctuations and changes were not necessarily captured in the prior model, and they are now. Another question we've been getting a lot is asking for a comparison of the inventory from last year to this year. Because of the way the methodology works, it is a different, it's not an apples to apples, right? It's a very different way to calculate those things. But there is a way for municipalities to view your particular sheets of what was submitted by your utility in VT-Pi. So I'm planning on adding that to the Q&A. I just got that information from VT-Pi just before this webinar started. So there is a way you can actually see sheet by sheet. So transmission, depreciation, all those pieces, there's a sheet for each utility in your municipality that you can actually look at to help you understand where the numbers come from. And like I said, I will be hoping to send that out right after this. So why does the state apply the CLA? So again, it's important to remember the way that our statewide education property tax works. If you did not adjust a value that is a brand new value by some way to sort of time trend it, then you're actually taxing that property at a different and unequal way than you are other properties in the town that have not had their grand list value changed for several years. So very broadly speaking, that's how that works. And again, it does end up ensuring that the utilities education revenue is still based on fair market value because the CLA is built in a few places along that calculation. There was a question on the listserv about inflation. So the model does use inflation every year using a Handy-Whitman index, which is a nationally and internationally used methodology to index utilities. So that is baked into that valuation. Another question a lot of folks had, which is totally understandable, is how do appeals work? How do I defend the value that I did not generate? And this is similar to other values that are sort of imposed upon the municipal and education grand lists, right? The state is responsible for defending these values if appeals go beyond the BCA. So up to that point, the defense is essentially legislative action requires that we use the value set by the state. We are going to provide to each of you, like I said, the way to actually see what was provided, and we are happy to answer any questions folks have. But essentially, any valuation that goes beyond the BCA, we would be defending that value with our experts and our attorneys. And before that, we're happy to help answer any questions and clear anything up. Like I said, I am working on giving folks a little bit more specifics about where their particular value came from, which is a completely reasonable ask. And I apologize, we don't have that easily available. Like I said, if you have a court settlement in place, or a decision in place, those values are honored until the end of that period. At the end of that period, then the municipality would be required to use our values. So this is a conversation. We make sure that, sorry, I lost my train of thought because I keep getting all these pop-up questions.
Jill, can
Yep.
I pop in
Please
there?
do. Yep.
So we do honor the court decisions that are in place, but sometimes we don't know about them. So if on your sheet, you know that you have a value that's set and you're saying this doesn't match what I have, we need to know about that because we want to reflect it. But there are many that have happened that we may not know about. So give us a call.
Perfect. Yeah, that's what I was hoping to get, and then my tongue got in the way. But yes, so definitely err on the side of letting us know, because we're sending out the values that we know about, but it's very possible there might be something that we would need you to let us know. Let's see. And again, there's been some questions about the impact on the town's tax liability. So as I articulated already, this is actually helpful for everybody's education tax liability because overall the values have gone up. And so this has a positive impact on folks' education fund liability. We did, and I think we might even be continuing to refine this particular example. We have a little table of examples that sort of show the impact on a municipal grand list. I understand completely why, if you see that a value has gone down by $1 million, for example, that seems like that's a really significant hit to the municipal grand list. But when you actually sort of dig down into the tax rate and what the actual liability would be paid, it may not be quite as extreme, but we're happy to help sort of explain that. And we do have a sample table to show folks. So at this point, I think I'm going to go to the chat, see if there are any questions there. And then I think I'd like to hand it over, Owen and Brian, if you folks are here and ready to help explain a little bit more about the methodology being different from how it was in the past. I think that would be great. Let's see. So I'm just looking through. Okay. So we've got to update our FAQ a little bit. So it'd be about a $5,000 impact on the municipal rate if there was $1 million loss. Okay. Okay. And an example I see in the chat, like Rutland City, I think Brian and Owen can help articulate that one. That one was probably one of the big outliers because there had been a mistake in how some of the assets were attributed to that particular municipality. So that is one of the reconciliations that's a bit more dramatic. So if folks have questions.
Jill, you muted.
You muted yourself.
I muted myself. If only I could do that. Thank you. Brian
So
or Owen. Oh, go
we
ahead.
have some older questions there that maybe I'll read them off and you can
Okay.
answer that. Tim said, we just got a grievance letter from Green Mountain Power because they had not received the state's valuation. Will they have gotten it by now? So can the utility companies can now log in and look at their valuations. So as of now, they can. Let's see, it would be great to get a detailed listing. You talked about that. Will Brian be given? Yes, we talked about that. Are the values from Brian reviewed by someone else for accuracy? Gordon is saying the math is wrong in the example of the amount of municipal tax at 0.5 times 10,000. You'd have to look at that again.
Yeah,
Maybe
it
when
looks like
Brian's
Chloe
talking.
answered a little bit later. Chloe says correct. It looks like our communications team just needs to update that it's to it be $5,000. Yeah, thank you.
Christy and I answered the CLA thing. Oh, Chloe answered that. Yep. Okay, good. And I got that one covered. And you talked about Rutland City. Can utilities grieve their property?
Yes.
Do you want to, did you talk about the process?
Yeah, so they still have to grieve at the same levels, but it would be pretty pro forma, obviously, because at the lister and assessor level, you're using the values that were given to you by the state. Then to the BCA, same answer. And then beyond that, the state is actually responsible for defending those values with our experts and our assistant attorney general available.
So Jill, I'm going to touch on that one. For grievance, I think that what you should do is ask what the issues are, and if it's specifically something to do with an inventory problem, there's something wrong that we haven't accounted for or accounted for too much. I say we being Brian, then we want to know, right? And we can work with you to fix it. If it's not and you can't resolve it by figuring that out, then I would suggest that you deny the grievance, because then it needs to go to us because we need to dig further to be able to figure it out.
Great, thank you.
And Ed is asking if Brian could discuss the cap rates for the hydros are done by PVR, not by Brian.
Correct. The hydros were not completed by Brian.
And West Rutland listers, I think we need to have a separate conversation about the impact on municipal grand lists. I agree with Jill's example, might not be correct, and it would be a major difference if the tax rate had been set prior to these value changes. That is kind of more what Jill's example provides. It does not show the increase in municipal tax rate for all taxpayers in that town if the grand list goes down by millions. Will listers get copies of inventories? You do have a copy. Oh, not the individual inventories, just the values. You'll have to go into VT-Pi. Maybe you can show them where. For 2024, there is no construction work, and total inventory is only specific. He's being specific. Where did the construction work go? I'm sure Brian will talk about that. Worcester has a hydro parcel, and the state used last year's value. The project includes 1.1 acres. Can't we use the new land schedule increase?
If it's solar or hydro, it doesn't have to do with Brian, so let's talk about it after. We can talk specifically with those towns.
And is easy fiber taxable on municipal level? I don't know what easy fiber is. We have a solar company in town. Special exemption wise. Solar, this is more about electric utilities, but I'll touch on that with you. We can talk later. Laura said she went into VT-Pi and they're not there. To be clear, if the utility grieves, listers deny it, BCA denies it, and then the state will defend it? Question mark. That would be yes.
Yes, but I would recommend you try to figure out what the issues are, and perhaps we can solve it before all that has to happen.
And
right. So for example, if GMP comes in or grieves and says, you know what, you have me for too many polls or something, I'm just throwing out an example, then you can come back to us and perhaps we can adjust the value before it goes forward all the way. If it's a simple error that we need to fix, then we want to take care of it ahead of time. So we need to have that conversation is what I'm suggesting. And if we can't have that conversation or it doesn't work, then I think you'd have to deny it so that we can figure it out at a later time if it's a bigger issue.
So easy fiber is fiber optics, and that is included in your inventory?
Well, so we don't have easy fiber as a utility on this that I'm aware of. I haven't seen that name.
That's right. I haven't seen
it's
that.
It's possible that we haven't gotten a filing for them. It's not to say that they shouldn't. So is it easy or EC? Anyway, we can talk about it. It sounds like maybe we need to grab them and we haven't, and we can certainly dig into that.
If it's a cable company that has fiber, then yes, it would be under,
Taxable.
it would be treated as cable.
Okay.
And there was one more, I think. Is the utility value to be placed below the category line on the 411, similar to cable valuation? This should be done as the value is not market-based and should not be a weight in the town CLA. Comment noted.
All right.
And that's it.
Thank you so much, Terry. And people can definitely keep popping things in there. So yeah, Brian and Owen, I don't know if you're up for just sort of a broad explanation of the methodology and how it might be changed, if that makes any sense.
Yeah,
you.
Jill, can everybody hear me?
Yes.
Great. So, yeah, there's a lot to unpack with all this. So I think with the questions that are there, it might not hurt to sort of give you a quick rundown of how we got to where we are and how I sort of got to where I am. And as some of you may know, I started in this world working for George Sansucci in New Hampshire, and I worked for him for about 14 years and doing utility valuation almost exclusively for that 14 years. I'm a certified general real estate appraiser, and I'm a New Hampshire certified assessing supervisor, I think is what we call ourselves in New Hampshire. So I do some assessing work annually for some towns in New Hampshire with the utilities there. I think probably the most important takeaway from my experience is, though, that twice in the last, since 2018, or three times since 2018, the methodology that I've sort of brought here has been tested in court in New Hampshire. And the first time in 2019 that I testified at length was at the New Hampshire Board of Tax and Land Appeals. And the second time was just this most recent April at the Merrimack County Superior Court in New Hampshire. And the reason that's important is because in both of those cases, the methodology that I used to get to the point where we could determine some inputs for a model were derived from the exact same process that I used here in New Hampshire. So for the 2019 case at the Board of Tax and Land Appeals, I was on the witness stand for about 15 hours, of which 13 of those hours were cross-examination. And so the utility was Eversource / PSNH, and they had appealed cases in 100 towns in that particular case over a period of 5 or 6 years for that case. And then subsequent to that case going to court or going to hearing, they had filed appeals in a whole bunch of other towns or the same towns for more years after that. That case ended up finally going to court in April of this year, and I had since left the Sansucci firm, and I had initially about 28 of almost 100 towns then as my clients. And so consequently, I testified in court, and again, coincidentally, about 15 and a half hours on the witness stand. And this time, about 12 of those hours was on cross-examination. So testing the work, I can tell you, it doesn't get any more intense than being 12 hours on cross-examination when there's 30 or $40 million in refunds at stake. And so it was very, very intense, but I can tell you that it went very well. And at the Board of Tax and Land Appeals, our communities prevailed in all those cases in 2019. And so I think it's important to understand that the company's default valuation profile is that the value of the utilities should not be greater than their book value. That has been Velco's defense, Velco's argument in various cases, including in Vernon, and it's been utilities' argument across the United States for a number of years. So the question becomes, are the utilities right? And is their value their book value? Or is it something other than book value? And excuse me. And so in those cases, we, both myself and the Sanssouci firm, use a trended original cost, less depreciation methodology that we test with various mechanisms to test for economic obsolescence. In other words, does the cost approach overstate the value or does it not overstate the value? And when it does overstate the value, we sort of use the common term economic obsolescence to express the difference. But in any case, we have that testing going on the whole time. So sort of with that in place, I have a relatively high level of confidence that the results in the aggregate of the work we did in this model get to market value, both company-wide and town-wide, as we work through the process. And I'll talk about that real quick in a minute, but it's important for me to note that when we've agreed to undertake this assignment, I think there was a half a dozen sort of major criteria that we established with the department. One of them, I think the number one was that we would be talking about, we're talking about a market value-based system, and that the market value-based system would be conforming, at least under the mass appraisal methodologies, conforming with USPAP under mass appraisal. Excuse me. Another criteria was that the system be defendable, and meaning that the values, either on a town-by-town basis or company-wide, I suppose, would be defendable in court in the event that there were an appeal. In other words, it's not just me saying that it's this value, is it defendable in court? And of course, coming out of the assessing part of it, another important factor was proportionality. And I feel like that proportionality, from my perspective, comes in terms of utilities compared to other utilities. And so we had encountered different methodologies, prior methodologies that were different for different taxpayers, meaning that Velco was reporting their market value one way, Green Mountain Power was reporting their market value based on the inventories from the state in another way, and the munis and the co-ops were pretty much following what the Green Mountain Power was doing. There are a few other utilities out there, including New England Power, and I honestly haven't seen their prior filings, but generally they would do something like Velco was doing. And so coming into this, we knew 3.5 years ago, I guess, that we had sort of a multitude of systems out there to appraise the different utilities. And the goal being to create a model that allows, or models that allows for, transmission companies all the transmission companies to report their property the same way, and the values would be derived from their reports in the same way, irrespective of whether it's Vermont Transco, New England Power, or Green Mountain Power's transmission segment. And so the idea is that if transmission property is being valued in New Hampshire and a company owns it, that valuation process would be the same no matter which company is the owner, which is fundamental to the market value analysis. Likewise, for distribution properties on the regulated side, and when I talk about the regulated side, I mean the corporate regulated side. So it'd be a corporate owned or investor owned utility, which is only Green Mountain Power for the distribution side. And those assets are also reported line by line by Green Mountain Power. And we develop the value from their reporting from that respect. And so for them, the proportionality is sort of within Green Mountain Power because they're the only investor-owned distribution utility in Vermont. Now, there are two cooperatives, which are member-owned, and they're, what, 12 or 13 or 14 municipal systems that are essentially owned by the taxpayers in those municipalities. And so we ended up with two different methods for the distribution assets, and one being for Green Mountain Power and one being for the co-ops and the munis separately. In analyzing the reporting prior to the Vermont PI system coming in place, it was pretty clear that I'm going to lump Transco and VEPCO into Velco, so we'll just call it all Velco. But Velco's prior reporting had a very rapid system of depreciation in it. And they argued for years that their system was their methodology was supported by letters of guidance from the department, which as far as I can tell, come way back to the early 1990s or maybe even before that, that essentially Velco had decided meant that they were to report their assets in the manner in which they've been doing it over the years. And that manner very rapidly depreciates the property when it's brand new. And so we knew that system had some problems in it, primarily because the company had determined its own market values out of that system. And so anytime that had come up in court previously, the answer to it or the defense of of values other than their system was always sort of illustrating how the company has created a device to value their assets at as close to their net book value as possible. And so, and I don't think it was a nefarious intent by Velco to do it. It was simply that over the years, they'd come to believe that they were doing what they were told to do by the department some 40 or 45 years ago. But in any case, we looked at the different methods of creating the assessed values prior to starting our work. And we knew that for Velco, it had those issues. And we also looked at the reporting system that had been developed years ago, I think with nobody on this call that really knew the derivation of the numbers in the system for the distribution side. And we try to make sense of how the old system was working and its relationship to market value. And so we made ourselves familiar with that. But ultimately, our task and our scope of work, as we've been talking about, is only the taxable electric transmission and distribution utility assets, and did not include personal property or non-taxable properties. And so the scope also included the fact that most of the utilities own some buildings, some structures throughout the state, and that for the most part, in most tax appeal cases, those buildings are considered to be commercial buildings that are not actually folded into the utility valuation process. So an example of that might be Green Mountain Power's office building in Montpelier, which Green Mountain Power could petition the PUC to sell that building. They get permission to sell it, at which point the buyers for that type of building would be other office building type buyers. In other words, commercial office or a commercial real estate investment trust, something like that. And it's not going to be a utility that buys that building unless the entire utility were sold. So those types of buildings were left to the local assessors to pick up, with two exceptions. One of those is in New Haven, which is Velco's brand new operations center, which, by the way, if you're looking for some place to go at Armageddon, that might be a place to go because it's a fortress in there. And likewise, their operations center in Rutland town. And both of those properties, we actually toured the Rutland operation, and I knew about the New Haven operation because of work I had done for New Haven. And we made the conclusion that those buildings were actually part and parcel of their transmission system itself, and that their transmission system wouldn't function without it, unlike the office building or maintenance building owned by GMP somewhere else in the state. So for that reason, those two types of buildings, we ended up providing values independently of the model for those two communities, but all the other buildings in the state would generally be treated in your CAMA system like a commercial building in your town. Likewise, land would be treated the same way, but that's generally been treated that way anyway over the years, I understand. Excuse me. So once we knew that scope of work, the first thing we did is we appraised in the USPAP 1 standard, all of the assets owned by Green Mountain Power and all the assets owned by Velco in the state. And that initial appraisal happened I think the value was, we started that process 2022. So the effective date, I'm trying to remember if it was April 1st, 22 or April 1st, 2023. But in any respect, we did a full-blown appraisal of both entities of all their taxable assets using all three approaches to value, the same way I did when I went to court in New Hampshire in 2019 and in 2025. And then, excuse me, lost my train of thought there a little bit. Anyway, so we went on and we did the full-blown appraisal. That's where I was going with that. We did the full-blown appraisal, and we did appraisal on a town-by-town basis for each of those two companies, starting with the property in the town. So we think about the process as being evaluation of the assets at the local level. I call that sort of bottom up. And when I sum all of the values at the local level, I get a value of the total of the whole. And then I can turn around and I can go from the company wide. So I can value Green Mountain Power's assets company wide, and I can allocate those values back to each town, usually based on the reproduction cost new less depreciation as a percent of the total. So as an allocating factor. So I have tested the value locally, and then I tested the value against company wide. And the result of that is we were able to reconcile a sample value on a town by town basis. So to give you an example of that, we went through the process, did both of those steps for both of the companies. And we factored in again the income, sales, and cost approaches. And we knew for Green Mountain Power how much revenue they had in each town, and we knew their numbers of customers in each town, and we knew their electric consumption in each town. All of those factors went into determining what we referred to internally. We started to call it the target market value for each town. So for example, if I had a town that my target value came from doing that entire process came to $1 million, we would begin the rest of the process to build the model and trying to see how we can give the Vermont Pie folks a single set of factors or a set of inputs that would return a value that's close to that $1 million as possible. And so if you stretch that out to however many towns in Vermont, 200 plus towns, we did that individually for each town. And so to do that, my initial thought process always was that we had to use a reproduction cost new less depreciation method. And that method, depending on what life you use, in other words, how fast or slowly you depreciate the property, will determine the outcome, the output value. And so if I used a set of lives in my cost approach that returned $1.2 million in my town, then I would know that those sets of lives were too long, at least in that town, because it overstated the value by 200,000 from my target value. And I'm getting that this is complicated, but the idea is that the model that we built had to use useful lives for various FERC accounts that in the end, when we totaled it all up, it came out relatively close to the target values from our full-blown appraisal. So the basis of market value here is the full-blown appraisal. And from there, we tweaked the useful lives that we used against the Handy Whitman trending. In other words, we bring it to current cost, the RCM, and then we depreciate it based on useful lives that are iteratively manipulated to get to the target values. And at the end of the day, we could monitor overall how it was working based on the ratio of the overall values to the company's net book. And I don't want to get into a whole discussion about net book, but essentially Green Mountain Power will sell for something like 1.5 times its net book. We know that. We know that that typically across distribution and transmission assets, that's what they sell for. So the target company-wide became, did the aggregate assessment amount to something greater than that 1.5? And if so, how much? Because if the ratio was 2.5 times net book, we know that we don't see that activity in the market. And if it was less than 1.5 times, then we knew that our lives were probably too short. And so this iterative process, which the team would agree, I think took a long period of time to develop, got us to a place where we had certain useful lives that we were able to give the Vermont Pi software folks that they were able to then apply to the reported information from the company. Those lives are fundamental to this work, along with, for Green Mountain Power and Velco at least, along with the Handy Whitman factors. In other words, how do we incorporate inflation into the original cost? And so we had to give that information to the software providers. And really, I think, Owen, it would have been the trend factors and the useful lives really that we had to give them, right?
Yes, those are the two data points that we provided.
Yeah. So for Velco and GMP, all of that work we did, so 3 years worth of work, we boiled down to 2 sets of inputs. One of them being the trend factors so if we knew a property was installed in 1980, then the software provider knew what number to apply to that 1980 original cost to get it to 2025 original cost. So we gave the software provider that information, and we gave them the years by which they would use to depreciate it. I would add that we also have depreciation, a half-year convention depreciation that we had to provide them the information for. And the fourth thing, it was the floor, the depreciation floor, which was 20%, meaning that no property would go to less than 20% of its reproduction cost new. And so previously, Velco had been using 24.75%, which nobody knew the derivation of, but most states have been using 20%. I feel like it's a good proxy for the purpose of that it serves. And so 20% is the new floor. So that's a different by itself, at least with Velco. So with that done, we were able to give that information to the software providers, and the software providers.
Go ahead, Brian.
I'm sorry. So the software providers would incorporate our input data to function with the uploaded data from the companies. And so I think that the next step is, and so for part of the I guess I would say up to this point, we've got a sort of very transparent way of dealing with the values, and that when we share those inputs with the companies, that the companies then know what their outputting values are going to be, right? The challenge is that the companies have to report their records, their property records, to the Vermont PI system. And that reporting methodology was different than it has been in the past. And it required the big firms to upload massive Excel documents into the system. And in fact, Green Mountain Power's accounting was too big for the system to handle, and we had to go through some process to get it sort of consolidated so it could work. But when they willingly, I think, conformed to the new methodology to submit. We had a lot of questions going on back and forth about what certain items, where they go. But I think without exception, all the entities tried to conform to the required reporting. But at the end of the day, for Green Mountain Power, for example, they reported their property records. And if we were to compare those property records in the exact same format as they were providing as sort of addendums to the inventory short sheets from before, we would see that those property records are the same as what they had provided before. Unfortunately, the prior system didn't really take into account their property records. It only took into account part of the property records. And so fundamentally, that was one of the problems with the prior system, is that it had accounted for single phase lines and three phase lines and transformers and those types of things in the prior system, but it didn't take one for one the company's actual inventory of properties. And because of that, the prior system had some weaknesses in it, I would say. And among those weaknesses or issues was a calculation where on top of the valuation, the prior system's valuation of the poles and the wires and the transformers and the street lights, the prior system had a value per customer of $2,500, which was subjected to depreciation. So it came out to like $1,800, I think. Unfortunately, that factor, that $2,500 or the $1,800 per customer, in my opinion, represented a deviation from what I would think would be a more normal standard evaluation, and I don't find it defendable. And so the prior system contained this one component that I don't think was, in my opinion, that I could defend. And if I'm using the replacement cost new less depreciation method across the board for Green Mountain Power, there's no reason to have a customer or per customer value there. But I can say that one of the differences in the communities where there are more distribution assets than transmission assets owned by Green Mountain Power's value would have gone down. In other words, if we were only talking about the poles and wires in the streets in your community and Green Mountain Power didn't own high voltage transmission lines, there's a pretty good chance that the value in your community would have gone down. And the reason for that is related to the sort of indefensible method from the prior system, at least in my opinion. So the value for GMP is based on those simple inputs that I discussed. When we went to apply the same system to the cooperatives and to the munis, we found, to our disappointment, that none of those entities could report their property records adequately town by town. And so, which is probably why 40, 50 years ago, this initial system got established in the first place. But the municipal system, some of them almost don't even have depreciation schedules. And for the co-ops, they have pretty elaborate depreciation schedules, but they have not been maintaining their records on a town-by-town basis. So they were not able to give us an inventory town by town like Green Mountain Power was able to do. Where again, Green Mountain Power can give us every nut, bolt, washer, crossarm, etc. But the munis and the co-ops can't do it. And so when that became obvious, we knew that we had to sort of do a hybrid system for the munis and the co-ops, which I think is justifiable in as much as they are different economic entities than a investor-owned utility. And so the member-owned utilities and the taxpayer-owned utilities, I think are legitimately can be treated differently because of their regulation structure. But in any case, they were also using the prior system, meaning the co-ops and the munis. And the prior system had a per customer value in it and the same problem that it had with Green Mountain Power. And so our system of just using the reproduction cost new less depreciation for the munis and the co-ops was not going to work. So from that, we worked quite a while, sort of iteratively, to determine a system that would most fairly represent the market values working from the co-ops then down to the munis. And I would add now that the prior values for the co-ops under the prior system, the aggregate value, meaning company-wide for the co-ops, far exceeded that 1.5 times net book, and in some cases, well over 2 times net book. And so we knew when we did that math that bringing it in line with market value, those values were going to go down. So if you have a community that only has the co-op in it, and you're going to see a lower value for the co-op than prior years. But I would add that at 2 or 2.5 times net book, the value that you had previously was not defendable. And I don't know why it wasn't appealed, but I know from my perspective, it wasn't defendable. And so the model for the co-ops became essentially similar to what they were doing before. They would report their sub-transmission lines, in other words, their larger power lines. They would report their substations, and then they would report their income by town, and they would report their numbers of customers by town. With that information, oh, by the way, we also recalculated the reproduction cost new numbers for those assets that they reported by mile. So there's new costs applied to the transmission lines and substation lines compared to the prior years. So those numbers came from us, and but they're different from the prior years. And we know now we know at least where they came from. And so the problem for both the munis and the co-ops was to get to a specific town by town values for the poles and wires in the streets when they couldn't report them individually. And so to do that, we used a method where we capitalized the net income from the income per town. And we also applied a per customer value, but this time the per customer value is derived by taking the same assets from Green Mountain Power's analysis and applying it on a per customer basis. So you're able to know from Green Mountain Power which of its assets are the same things as the poles and wires in the streets that are owned by the munis and the co-ops. And then so we extracted that information from Green Mountain Power, and the value per customer was, I think, $2,640 per customer. But keep in mind, doing that part of the process, we did not attempt to value the individual pole transformers, the individual poles, or the individual wires in the streets. So this is in place of those values, not additive to those values. So I know I've spoken for a while here, but long story short is that the difference for the co-ops and the munis is that that the prior system, resulted in what I think were probably indefensible values. And so now the ratio of the total values to net book are much more in line with what they would be if we were to go to court with any one of those entities. Having said that, I think I've said plenty. I would add though that we didn't play a role in the CLA part, and that our work. Oh, the other thing I was going to tell, I'm sorry, so testing the values, someone asked about whether it was tested within this system, and we have a free auditing firm called Velco that has gone through our numbers line by line by line, and every time they thought there was a discrepancy, they sent us a long email. So I have a massive email thread with them that essentially wanting to know what we did and why. And all but one very small change has we reckon both sides have reconciled. So they agree with what we did. They understand the process. And with all but that one PERC account, we're in full agreement. We're going to have a meeting with them this afternoon about that. So with that, I feel like you're probably not going to get a better auditing of our work than what Sharon Tucker will do if you know Sharon Tucker.
Thanks, Brian. I think
Yep.
we've got a few questions I'm hoping to get through. I know we're way over time, but I definitely want to make sure we do our best. So hoping real briefly, one of the questions is, have rural co-ops gone down in value because they have fewer customers per mile of transmission lines? So meaning their return on investment or their value on the open market, if they were for sale, would be lower than an urban utility with the same amount of infrastructure. So I guess sort of like broadly speaking, right? So like how are the values attributed per town?
Yeah, so the answer to that question is yes. That
Okay.
generally speaking, the income for a rural town is going to be lower than for a more urban town. And the NOI would be lower for a rural town than an urban town. Therefore, the resulting value would be lower in the rural town.
Great, thank you. Let's see if I've got one more. And then, yeah, and just so folks are aware, the CLA is outside of the purview of the valuations, like Brian said. So that's a separate piece that I've been trying to mitigate and answer questions on that. Somebody asked if you wanted to address like significant substations and if they should be handled differently than lines or other T&D assets. Again, hoping to keep it real succinct so I can keep answering other folks' questions.
Yep.
If that's possible, knowing it's a complex question.
Yeah, those are baked into the system. And so either the co-ops or the munis, they're represented, and in the RCNLD method for the two investor-owned utilities, that they're accounted for as well.
Great, thank you. Looks like a lot of the questions are more about sort of like the appeals and things like that. So I know it's 11:09, so we've gone over. I definitely want to, if folks have questions after this, shoot me an email, shoot your DA an email. We can do our best to answer them. So I think we sort of understand broadly how you've done your new valuations, right? And then they're attributed town by town based on a few different components. And so that's different as well. It's not maybe quite as like a straightforward as maybe folks thought before, but it's more accurate and equitable for the utility.
If I might, Jill, just real
Yeah,
quick, I would say that now, though, that it's actually simpler because we have very few inputs now.
Okay.
And it's a matter of just getting over that hurdle and have it reported more than it is the inputs now, I think.
Okay, great. Thank you. All right. I know we've probably got lots of other questions. I think we've got through the ones in the chat. Just really appreciate everyone's time. Looks like we've got 92 people on here, which is really good turnout and shows the interest. I know there's still a lot of questions and concerns. So like I said, definitely this is a priority for all of us to answer your questions. So send me or whomever a note and we will get back to you. We do pester Brian and Owen with ones we don't have the answer to. And I do think, like Terry has been sending out regular updates, and I think there's just a couple stragglers that are still getting resolved, but they're largely complete. Yeah, and thank you. Thanks, Brian and Owen and Christy and Terry and everyone for being on here. Again, happy to answer any other questions folks have over email. And let's see. Okay, great. All right, we're gonna end the we'll end the webinar and continue to answer questions folks have over email. Thank you again very much for being here. Thanks, gentlemen, and Terry and Christy. And we'll talk soon. Thank you. Bye-bye.